You might have wondered what a non-QM loan is and who it's for. Hey future homeowners, I'm John Werner with Mortgage and Credit Pro, where we make home buying simple, clear, and built around real life, not just a rule book. Today we're talking about a loan type that most buyers have never heard of. But for some people, it's the difference between being told no and finally buying a home. It's called a non-QM loan. And if you're self-employed or an investor or your income doesn't fit neatly into a box, this video is for you. Let's start with the basics. Non-QM loan stands for non-qualified mortgage. Now that name sounds scary, but it really isn't. It does not mean risky or bad. It simply means the loan doesn't follow the strict guidelines of a traditional loan program, such as a conventional FHA or VA or USDA. Traditional loans are based on W-2 income, tax returns, and specific formulas. If you don't fit the mold, even if you make great money, you can get denied. That's where non-QM loans come in. A non-QM loan looks at how you actually earn and manage your money, not just what your tax returns show. These programs are designed for real people with real situations. For example, if you're self-employed and write off a lot of your expenses, your tax returns may show low income, even though your bank statements tell a different story. With a non-QM loan, we can often qualify you with 12 months or 24 months bank statements instead of tax returns. If you're a contractor, a gig worker, paid on a 1099, some programs allow qualifications with just 1 year 1099 income. If you're an investor, there are options that qualify you based on the cash flow of the property, not your personal income at all. Now let's discuss credit, as this surprises many people. Non-QM loans are flexible. While rates can be higher than those of traditional loans, the trade-off is approval when other loans fall through. Credit scores may be lower. Past events, such as bankruptcies or foreclosures, may be considered sooner, and guidelines are often more forgiving. Down payment may vary, but many non-QM programs typically require 10 to 20% down, depending on the loan type, credit profile, and property use. Again, this isn't about perfection, it's about overall strength and consistency. One thing I always want buyers to understand is non-QM loans are not a last resort. There are smart options. Many buyers use non-QM loans to buy now, build equity, and refinance into a traditional loan later, once your financial picture lines up better. This is always where working with a mortgage broker matters. A bank has one box. A broker has access to many lenders and many non-QM programs. When guidelines tighten, where your situation is unique, flexibility becomes everything. Who are non-QM loans best for? Self-employed, business owners, freelancers, real estate investors, buyers who are a strong asset but uneven income, people who were told come back in 2 years but don't want to wait. If you've been denied before, it doesn't mean you can't buy a home now. It often just means you were looking at the wrong loan. If this video helped you clear things up, give it a thumbs up, subscribe for more straight talk, mortgage education, and share it with someone who's been told no, but shouldn't have been. I'm John Werner with Mortgage and Credit Pro. Thank you for watching, and I'll see you in the next video.